Yo, yo, yo. Welcome back to the channel. Gonna do an update on AMC, talk about SPY as well, just to connect to AMC. Do an update on some of the things that we've been watching for. Make sure that you watch my video from last night where I talk about historic falling wedges. I compare AMC's current situation to some situations that we've seen in the past with Apple and Amazon in the 90s, 2000s, and 2010s. And just understand that it's technical context, right? So I compare AMC's move of like where we currently are right now, 75% down, um, to other moves in the past with Apple and Amazon. And a lot of people were saying, that, well, those companies had fundamentals and stuff like that that were driving that drove the price up eventually. And so I just want to say that anytime that a company is down 70 or 80%, like Apple and Amazon did experience in those situations, the public's perception of them is not that they are fundamentally valuable companies. That's generally how it works. Like, that's why technicals work so well, because they can show you like relative price action and how like a bearish trend may be coming to an end. Like, that's the way that you see it, because whenever those things are happening, the public's perception is not good of the companies. They're not like looking at Apple in the 90s and saying, oh, this company is down 75%, but they're going to come out with the iPhone one day, right? That's kind of the point. So just keep that in mind. Make sure you go check that video out. I think it's a really good video for everybody to watch. If you haven't already, make sure you drop a like on this video. This is going to be the update for AMC, just updating all the things that we're looking at, what we're watching. And yeah, so let's get into it. So obviously, I mean, I will just kind of open up by saying that we are looking at potential falling wedge scenario that's playing out on AMC right now. There are a few different ways that you can draw these, and what happens is they start to form within themselves. It's almost like an inception sort of thing. But you can draw from here. You can also draw from here. But the main thing that you want to be paying attention to is that the bearish pressure to the downside, generally speaking, in this larger trend, is relatively weak compared to it to the from the top side of the move, right? So bears are able to press the price down really aggressively from the top, but by the time they get to the bottom, that momentum is slowing down. That's what falling wedges are meant to represent, right? And so, and again, there are a few different ways that you can draw this from the bottom as well. You could draw here if you wanted to. You could technically have a breakdown there. And that's okay. You can have a breakdown out of a falling wedge as a fake out, as you saw here as well. But there are a few internal ones, but I like looking at the more macro move, right? Because the macro support line that's here that we're interacting with is what's really holding the price up. And I don't think that you necessarily turn right around from here. I think it actually is more likely with the current market conditions that we're in that you continue to trade down into this range. But a falling wedge is generally a good reversal pattern. They work very well. We've charted them before with AMC. If you were following me on Twitter before I started making YouTube videos, I was charting. Actually, it wasn't that. It was charting this as a falling wedge. And we got a breakout of this. And well, we actually got a breakout, then a fake out. And then we ultimately broke out here. And that was the run to $52. And then this is when I started my YouTube channel here. And you had a falling wedge that formed here that I was following from pretty much up here that we broke out of. And that sent us on our run eventually. But yeah, enough about that. We talked about that enough in the other videos. Some other things that I'm looking at, like I'm just paying attention to, is AMC is having some pretty consistent runs down in price here. So if you measure from the top here in February down to the bottom, February of 2020, I'm sorry, to the bottom in January 2021, you get a 75% retracement. And I'm sure this is related to Fibonacci. But if you do the same thing from the top in January to the bottom in February of 2021 for the buy button, you have 74% down. And then now you are sitting at around 75%. I would take it with a grain of salt. I'm not saying that that necessarily means that you have to reverse. It's just something, sometimes stocks can operate in cycles. So it's something that you should be paying attention to and at least be aware of. There is an alternative reading as well where, give me 1 second. I think that I want to turn after hours on. So let me go to the 4-hour. Sorry. Now I'm just kind of curious. Is this here? Yeah, this is 75% as well right here, if you consider after hours. And then from here to this drop, if you measure the pre-market move up to $25 in January, you do get about 80%. So that's another thing to be mindful of. So if AMC were to repeat its retracements, which I'm not saying that it necessarily has to, we would meet that 75-ish% threshold at this $18 level. And then 80% would be around 1450 or so, which we've talked about in the past being a key Fibonacci zone. Dude, my computer, I don't understand why my computer's lagging so bad lately, but I'm sorry if it's choppy on the screen. It's the problem I've been having. I'm going to have to sit down with it and try and figure it out. I haven't done that in a while. But the 1450 level, so the example that we're using is if you measure from the bottom before the January run-up to the top of that January run-up, and you put your Fibonacci retracement tool on log scale, you can see that you came down and you kind of tested this 618 level. You hung just above it. And if you do the same thing from the buy button bottom to the top in June, that puts this $14.26. So if you hung above that would be like 1450, right? Which correlates with that 80% drop. So that is something also to be mindful of. If you do continue that retracement down to that 80% level, I would imagine that 1450, with this being previous support, previous resistance before the run up in June, right? Let's go to the daily chart and look at this. I think it looks better on the daily. You guys like my new color schemes? I'm doing this like it's light, kind of lighter tone colors. But anyway, this 1440 level was the previous resistance before your breakout in June, right? So that is going to be like key support whenever you get down to that zone. And we've talked about if you break down into this zone, then $10 can come relatively quickly. You're going to be trading in this trading into this $8 to $10 range if that were to happen, if you were to break that 1450. So I'd say that bulls definitely want to keep that zone alive. We'll draw this here as a potential like zone that you would go back to visit. What color should we make it? Somebody's saying he's putting emphasis on this really bearish projection. He's a shill. It's okay, buddy. Still love you. We're not here to confirm our own biases. We're here to, look at all the possibilities and understand them. So yeah, that's kind of the overall look of the chart for me. Those are like the main things that I'm looking at, what I'm watching. Today, really nothing changed in my opinion. You're still holding this zone here at the bottom. You could draw maybe a more specific trend line like this right now as well, for like a shorter term. Let's see if there's a connection. Yeah, you do have no. Here you go. I could just extend the line, couldn't I? That would make it way easier. You do have definitely some confluence here where you're getting rejected here. Once you got support here, you blast it up. Support, rejection, 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 and then ultimately support. Okay, so yeah, I like this line as well. So perhaps this is another wedge to be watching. Wedge watch. We're on wedge watch, guys. Wedge watch. You could extend this out as well. So like If that $14 scenario were to happen, perhaps you would continue to bleed out into this range. This takes you all the way into March of 2022, just to be, completely clear with you. And then let's do an update on OBV, and then we'll take a look at SPY right quick, just to look at the broader market, and the type of things that we think are going on there. I haven't looked at OBV in a while, so this will be interesting to look at. Yeah, you're definitely having a diminishing kind of uptrend happening here for sure. You're definitely going to want to hold this zone as support, but you still do have, relative higher lows happening here. The higher highs aren't quite as impressive here. This is the daily chart, by the way. But over the course of time, I would expect that if you do end up getting a bounce here, if you do see that short-term upside, this does start to look like an ascending triangle of sorts, just because, it's, you would say maybe it's a wedge, but it's so close that perhaps you would measure it this way instead. Yeah, you would, because these are so this is still an ascending line of support here. You could also make the case, though, that you broke this one, and so now you're trying to reestablish a new trend on OBV. So that's something to look out for. Let's look at SPY. So, I did tweet this out on December 27th. I said, SPY, can we get much higher? And this is the SPX chart, but we ended up going like 0.6% higher, and now we've dumped like 6% as it stands now. Yeah, as much as 6%. So, what we're looking at with SPY now is you're starting to get into a pretty critical zone here, and I'll show you why. And the reason that I'm showing this is because I do believe that indexes are going to play a key role in AMC's ability to thrive. Right now, whenever indexes are dumping, AMC is dumping right along with them. You do have this gap down here. Is this gap here on the daily as well? Look at this gap. Is this why the economy's crashing? Sorry. Just trying to get this zoned out here for you. Yeah, you do have a gap here that you never filled on SPY. Jeez, dude. Do they leave it like, it's kind of crazy to think about, like, it's just hunting this gap, isn't it? So this would take SPY down all the way to 447. I mean, you could see a bounce. But as far as zones of support that you have, now you're going to start saying, okay, well, I want to draw the trend line here. And what you're going to want to do is try and see if there's any other relevance to this line in SPY's history. Because just one line isn't going to, like 2 touches is not enough for a trend line. You could say it's a potential trend, but it's not a trend yet, right? This kind of reminds me of sweet tarts, this kind of color scheme I'm using. Delicious. So I can see here that you have support here. Why is it red? You have support here. Definitely some trading that occurred here surrounding this zone. Rejection and ultimately support here. Right? Once it broke here is when it kind of rallied up. Let's go back more history for SPY. And really, I should be looking at this on one of the S&P 500 charts, like the SPX, just because then I can look even further back, and I'll show you guys that. It's pretty cool. Yeah, you have a rejection point way back here, and that's pretty much it. So, oh yikes, man! This was the .com bubble. Okay, so basically, here's where you got rejected for the .com bubble, and ultimately got sent down. Yeah, and Amazon. I remember. I looked at Amazon's chart. It had like a 95% drop on this. So yeah, I mean, that's pretty much that's the vibe that you're in right now. Okay, you're kind of in a zone of is SPY overextended? Like that is definitely a conversation that needs to be happening here. And if SPY is overextended and it takes a big old dump, I mean, I know a lot of people in the community will say that that could lead to margin calls, which would lead to heavy covering for AMC, et cetera, et cetera. But I will just say, like, from my personal opinion, I would think that there would probably be a lot of pain before that started happening, like on AMC's chart. Like AMC, and I'm not trying to scare anybody. I'm just saying, like, that's reality. Like every company is gonna get crushed whenever that happens, if that does happen. Don't look at these lines, okay? Oh, that's funny. I tweeted that earlier, so you can go on my Twitter if you want to see that. So let's draw this line again. Let's look for that support again, and then just look at the historical, if it has any historical. So now you're saying you want support here, right? You can go back further in history on the SPX chart and get a better idea of how relevant this line is, right? So remember, it's the same line, okay? If it's the same line, we should have a rejection in like the year 2000 or the .com bubble. See. Oh no. See here we have it almost as the rejection point for 2000, the '08 crash almost. And then you actually extended over it on SPX here before. This was like almost, this looks like your distribution zone, right? You come up, you get rejected by it for '08, and then you get sent up. Let's see if it has any other touches. Oh yeah, look at this. And yeah, this is a crucial line right here. You can see, look, the Great Depression. Well, the Roaring '20s broke just above it. I don't know if you guys can see, but there is a dot on the screen right here. Basically, it got as high as this like $30.50 level. So it broke above it briefly. There's not as much trading data back here. That's why you can't see it clearly. It broke above it here briefly before it turned around and got absolutely hammered. And then you went into this is 1955, 1956. You ultimately got rejected in 1957 off of it. Then you ran back up to it in 1959, got rejected down. 1961 got rejected down. 1964 through 66 got rejected down. Man, this is a serious zone right here. Wow. 67 to 69. And then he never came back and revisited again. And until the year 2000 on SPX, and then you can see that it was almost like a reverse magnetic force, like it was pushing it away. And now we've broken it, and now we're pretty much retesting it like right now. So this is kind of a big deal, honestly. Wow, it's something to think about. And then if you draw a fib, okay, so. Yeah, I mean, this is not the best situation, but you just broke your 0.5. If you measure from here, October of 2021, you broke your 0.5 at 45.42. And your next zone is the golden pocket between 44.78 and 44.61. I know a lot more people use SPY, so let me just show you on that chart. And then yeah, so I mean, look, SPY right now is in a place where it's like, okay, you definitely need to start turning it around. I mean, this is key. Used to be key resistance. Sorry, I got a little bit of allergies or something. So the 618 zone on this for SPY would be 445. Ooh. And you would be through all these support trends that we talked about already. So let's project that out then. So let's pretend like that's what happens. I'm just trying to get a good understanding of where I think SPY is, because I just think that it's going to play an important role in the initial rally for AMC and how much pain actually is experienced. Goodness. Sorry about that. The heck, dude? Need some water. Spy got me all shook right now, guys. Whew. Just kidding. Economic collapse on the horizon. Kidding. Yeah, so this would be your macro the 445, right? So let's pretend like that happens. If that happens, you go here, pretty much over the course of the next few weeks, let's just say. And then you would be drawing your trend lines from here now, here. So let's see what that looks like. So yeah, I mean, you do have pretty good rejection zone here in February of 2021, February of 2020 as well. You got rejected here in October of 2018. You definitely traded this zone in 2018 for sure. Well, really all the way back to 2015, you were trading this zone. And this was 2016, you came back and broke it, and then you traded back above it. 2011, you touched it. 08 market crash, you tapped, and then you broke under it. So yeah, I mean, this is definitely a relevant line here as well. Ah, oh, dude, I did the same thing. I did it on SPY. You guys want me to chart SPY so bad. I'm just kidding. I'm just kidding, dude. Don't take it personally. Let's do the same thing. All right. And we'll go on the monthly chart, make it a little bit quicker for SPX. And I'm very roughly drawing this. Don't be too, all right. Don't be too crazy. So for a similar effect, what would you do? Oh, we were actually hanging above on SPY. Yeah, I don't know. You don't have any other support back then, so that's kind of concerning. That's not good. So yeah, I think this is kind of the line that you need to be watching. Support in 2002, you broke it, and now you're holding here. And so, I mean, if I'm being honest, I'm not the most optimistic about this because this looks like overextension, and with just like the fundamental narratives and stuff like that are going on in the economy right now, it kind of seems like it would want to come back down. It seems like it would want to come back underneath. And then at that point, you start to measure your fibs from the bottom of COVID. And then, that would be where you get your Fibonacci levels. You correlate them with previous trading levels, and you can see, I mean, there's already relevance here. Definitely a relevant level here. This is the monthly chart, by the way. Relevance here, right? So yeah, definitely these are going to be kind of the zones. I mean, I think that you probably, if this is the top, yeah, I mean, things can get pretty ugly pretty quick. So just be on the lookout for that for the horizon for AMC. And basically what that all comes down to is, how far, how fast does it happen for SPY? And then if those margin calls come in, right? I mean, look, what I'm telling you is, I got there's a lot of people in the community that are saying, oh yeah, market crash will cause margin calls. I just want you to know that, like, if that were to happen, like, I just want you to be aware that would be this sort of situation where you would see this before you see some reversal. You're going to see some pain in the market. It's not going to be this like, it's not going to be this inversion. Like SPY is just dumping and then AMC is just reactively pumping at the same time. It's going to take some time. There's going to be like a delay. And so if that was to even happen, right? Like it is still speculation at the end of the day. So just prepare yourself for that. And understand that, I mean, unless somebody has evidence that they can point me to where that would be, unless you can show me the liquidity requirements on whatever hedge funds and whatever positions that they would have to cover as a result of that, then I'd be interested to see that. So make sure you share that with me if you have it. You can reach me on Twitter or Discord if you have any information like that. But I just want everybody to know, like that it would be that sort of situation. And you saw that with Volkswagen. Like Volkswagen got knocked down by the '08 thing, and then it squeezed. So I mean, it can happen, but I just don't want people to have false expectations. You got to stay balanced. You got to stay focused. But yeah, so this is pretty much the wedge. I showed you SPY, I showed you SPX, all the relevant trends that could be developing there. See if there's any reasoning. Yeah, there's the Fibonacci's down here. Yep. So this would be, and just to tell you, like, I do think that this is unlikely. Okay, like I don't think that this is likely. I'm just saying that it is a Fibonacci level, and when I say that Amy likes 786s, I am referring to 786s that are not on log scale. Okay, so I'm actually referring to reversal at this 1950-ish level. Okay, but it is relevant because I am charting in log scale. It is relevant to bring up log scale, but I do think that the more likely scenario is that you end up holding this as support, and then you get sent up, and then once you get sent up, then depending on what things look like here. I think you come up, you test this region, which would be like $28 at this point if something like this happened in March. Maybe it could be sooner and a little bit higher. Like it could happen like more swiftly. I'm not saying that this has to necessarily happen either. By the way, this is just a technical perspective. Okay. Yeah, I mean, yeah, it's gonna require some recovery. I mean, if you go through here, I think you still get rejected down. You come back and test $17 probably. That might be when you fill your gap. And then you can come up here. Where's your gap at? Yeah. So you could do something like this where you just kind of break below, fill the gap, and you just get reversed right back up. That's totally possible as well. But yeah, so that's pretty much the full technical perspective. That's everything that I'm looking at. But yeah, I think that, I don't think that you're just gonna blast off to the moon from where you're sitting right now. I think that you're gonna need to kind of re-establish, some momentum here because you just got knocked down so hard recently. But that's what falling wedges are. You kind of you feel like your upward momentum is getting dissipated because you're getting crushed like this, and then all of a sudden, whoop, you just get a swing up, and we saw that. I mean, look, I'll show you how explosive it can be in this relative trading range, right? I would say that I was probably charting it like this. I remember we came back and retested and then bounced up. Yeah, so it was probably something like this that I was charting. It's a little bit because there's just so many different ways that you can draw it now, when you look back. But I think I was charting it like this. You see, you bounced up, you jumped out of here really aggressively. I mean, look, this is a big move. Boom, 25%. You came back, tested it, traded it for a little while, and then boom, you blasted right off of it. You ended up getting from that second break 72%, 70%, right? So it can be a very explosive move. And what you're looking at right now is a much more significant macro wedge, okay? Like this is a much bigger, like this thing has a lot more powder, okay? Like so if this thing does break up, and it's not guaranteed to, but if it does break up, then it can be a relatively explosive move. I mean, you're talking about now, you're going to be going from here. I mean, you would see pretty swiftly, you would see probably a movement up to this like $45 to $50 region, in my opinion. And that is, I mean, you do still need to, like, when you get this breakup, you do still need to get that volume in, okay? So, like, if you come up here, that's what institutions are looking for. If you come up here, though, and there's no volume on the other side of this, you're going to get a bull trap, and then you're probably going to get sent lower, I would speculate. So, those are the situations. That's pretty much how I'm looking at AMC right now. If you look at, I mean, we can briefly just look at it from a Wyckoff perspective. I'd say that it kind of aligns, as we were saying before, with this being the cell climax, automatic reaction, this is a cell test, phase B distribution like we talked about. And then now what you're doing is this is like a continuation of that phase B distribution. And then a move down here would be like a spring type phase. So you would have like spring, retest, last point of support, and you'd have your swing up like that kind of strength. So that's how I see it. Hopefully you enjoyed the video. If you did, make sure you drop a like on it. It's a good way to support the channel. And until next time, appreciate you guys.